Michelle, thank you for joining us on Capital and Power. And I just want to tease what we're going to be talking about. Not many people can explain how condoms at Christmas and Steve Jobs are connected. But we're going to go there. That's the tease to hopefully get people to listen. Christmas condoms and Steve Jobs.
First, love it.
Love that. It's good to see you.
Thank you, Adam, for having me. And that was quite an interesting opening. I think it's going to get some interest.
Yeah. So I don't want to talk about the book you're writing just yet, but the answer to what I just said lies in some of the chapters of that book. But first, tell me about Porsche Capital Management, why you launched this firm and why you're unique, because you're one of the few women to own their own investment firm in the Dallas-Fort Worth area.
Porsche was built around a large foundation client that I inherited or obtained about 10 years ago. And I realized that what I do, active management combined with alternatives, a lot of shops were not going to allow me that freedom to use my intellectual capital and my experience in those areas. So I wanted to be able to provide those particular investments also with a moral compass. Those two things were really important to me, and it's hard. I couldn't find it, so I had to build my own.
We're going to talk about your background, institutional investing, how you brought that to average people like me. We're going to talk about the economy. I just want to get into a little bit of the background to answer how I tease this. Let's start with the condoms. In your book, which is soon to be published, you talk about an experience in the 90s with being one of the few women in an all-male dominated field and an individual who you call Gary, we won't say the real name, who basically was inappropriate. The term would be sexual harassment, inappropriate comments, and how you got your revenge with a colleague. Tell me about that.
Well, I was a female that was the head of a portfolio management group in a private wealth bank at the time. And Gary was always very good about hitting on any female, especially any young female. And there weren't any repercussions, even though it was a very large bank, actually the largest bank in the country with the human resources area. But Gary had a very large book of business and wealthy clients. So in that case, Gary could do whatever he wanted. And so I got tired of his shenanigans, and I just came up with the idea after Gary announced that he was going to have an open house Christmas party for his new home in La Jolla, that I would have the admin or administrative assistant to the head of private wealth go out and get condoms, other sexual paraphernalia at a shop, and plant them at Gary's open house before anybody got there. And it worked. I knew that if I did it, Gary would suspect me because we were constantly having friction between the two of us. And I didn't think that he would suspect the assistant. And so she went in, dropped the condoms in trees and other things that you would see in a sex shop in strategic areas as the caterers were there, and everything was in place. The party began. Think of a beautiful condo overlooking the shores of La Jolla. Gary made it very clear that there would be gifts, and there were a pile of Tiffany boxes, blue bows, etc., waiting for people. And then suddenly, as everybody's in place, people start pulling apart condoms out of the trees. What's this? What's this?
His mother.
And his mother also saw some of this. And Gary, what is this? And she was a high blue blood from the East Coast. Her husband had been a broker for quite a while. So it went down just exactly as I wanted it to, Adam.
Did he ever bother you after that?
No, he did not.
We're talking the 1990s. And
yes. Yeah.
And I think that,
Late 1990s. It was close. It was close to the tech bubble. But
okay,
yes, you're right. You're
but
right.
look, we're Gen X. Um, I think that I have friends, very close friends. I'm thinking of one woman in particular who experienced the kinds of sexual harassment or bullshit that you had to experience, and that men of my generation, we were not aware of unless the women in our world shared this with us. I did not
Right.
learn what happened with my friend until 20 years later. I only learned this about 5 years ago. And it impacted her career. Before we get into the current state of investing and how you're helping clients, um, I would imagine a lot of women of our generation got shut out of advancement. And today, as you look at what might have happened, how does that wrong get righted?
Interesting question. It gets righted then in the fact that two ways that we become more aware of who's not in the room, and we're still not in the room as women. When I go to New York and I'm at different very high levels of institutions, and I look around the room, I still don't see a lot of women who are managing money. I mean, actually, we have less portfolio managers now than we did in 2002. That's the facts.
Why is that?
I think it's twofold. I think it's because we're not taught that it's an option, meaning women aren't taught that it's an option, minorities, because they're also not included as well. It's money and investments is a topic that's typically talked about in wealthy families, right? And it's a normal occurrence. You talk about it. Even today, people talk about AI stocks at the table. They talk about cryptocurrency, but women still aren't part of that conversation as far as I can see. And also, women have this risk aversion to investments in finance. And we always see the downside. I always say men always see the upside, right? They're always chasing the investments that women never would, because women always see the downside. So when I was teaching at University of Texas in Dallas, I would encourage women to go into the profession, think about finance, think about getting the CFA. Very hard conversation. It's still a hard conversation.
I'm thinking of what you just said and just what happened recently. I was watching an AI conference, and of course, Elon Musk and the CEO from NVIDIA, front and center. And I'm trying to think of women who are front and center in AI. We interviewed the CEO of it's a unicorn, Ailey Labs.
Uh-huh.
But she's rare. And she came out of a finance background. She launched her
Right.
AI logistics
Right.
firm. But yeah, I'm trying to think of the women who are front and center. Sheryl Sandberg used to be regarding Meta, but
There still aren't a lot. I mean, you're seeing some that are in technology.
Mhm.
I deal a lot with venture capital firms and invest in the deals that are put in front of me. Silicon Valley and New York. I can think of one firm that has one female senior person in the firm.
there is, and I'll get email on this if I'm wrong. Fine. But there does tend to be a genetic basis. Men are more willing, perhaps, genetically to risk and do the stupid things. These
Sure.
videos,
Yeah,
uh,
of course.
and women perhaps are more predisposed to assess. That would seem like the perfect. You would want both people at the table at an investment firm, because you do want the people who are going to push, 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 and then you want the
Right.
people who are going to say, "Here are the pitfalls. Here are the pitfalls," so that you can jump off the cliff, eyes wide open. But that doesn't seem to be what happens.
I would totally agree. And I think that's one reason why I'm a better investor than if I just looked at the downside. I have the capability of looking at the upside and the downside. So I'm kind of a blend, probably because of my background and also the CFA. But yeah, men will chase and women will not take the risk. I mean, if you look at the average portfolio of a female versus a male, it's going to look very different, right? And women hold more cash. Women aren't going to hold a lot of technology stocks. Women aren't going to, in general, not want to participate in a private deal. They're just not going to want to do that. Now, in their defense, they earn less. They're out of they take longer periods of time out of the workforce for family, et cetera. I was just talking to a colleague in London. She's taking care of both her parents who are sick. They're in their late 70s because she's the oldest, she's the girl, and it's all falling on her. And by the way, she's also taking care of the nephew at the same time so her sister can work. I mean, we just have too many things where we're the nurturers and we're not taking care of ourselves.
Even in 2025, I am curious, what does your clientele makeup look like? The demographics? Is it mostly women? Is it mostly men?
You know, it's mostly men because the men are willing to do alternative investments. And that's where that's where I'm different. I'm good at managing wealth in general for institutions and individuals. We're trying to change that in terms of helping women realize that they do need to take more risks and they do need to be more aware of what's out there, how they need to ask questions, because that's what it really comes down to, is asking the right questions, because they're so afraid of what they don't know that they don't ask the questions.
I would say that's actually human nature, because I think all of us, you talk about the book, and I'm about to ask you about your Steve Jobs experience, but you talk about the book, people afraid to ask the question that needs to be asked for whatever reason. Sometimes it's you might look unprepared. Sometimes it's you might look in your own mind being stupid. But you went through this in 1995. Steve Jobs was looking to take Pixar public. And you talk about the experience. You read, the offering, and you go into a meeting and you described all of the white men around the table in their business suits and white shirts. And you asked the key question at that meeting.
It was an interesting situation because before an IPO, and it's still the case, you get the prospectus or the red herring, and you have the ability to look through that in detail or not before you go into the meeting. And knowing that I'm more often than not, and still the only woman in the room in those circumstances, you want to be over prepared, right? Especially if you're trying to determine if you're going to make that investment, but you don't want to make a bad investment, especially as a female, because you're less forgiveness for you typically, and no one likes to lose money. And so I was over prepared. I was not prepared for Steve Jobs to walk in the room, by the way. So that was very cool. Just as a side note, he couldn't find anybody to sell Pixar for him, or an investment bank. It was harder for him, so he went with a more regional bank. And he finally just said, of course, being Steve Jobs, I'm going to make the presentation myself from the company. I'm going to have my own pitch book, which he did. Walked into the room, because I think this is the entertaining part. He was known for not taking showers or hygiene. I can attest to that. Black turtleneck, greasy hair, the white dandruff. And he also didn't have tolerance for fools. And so a lot of people asked very foolish questions because they hadn't read the prospectus. All right. And so the questions that were asked, a lot of them were obvious. It wasn't the fact that I was smarter. I just read a lot. And what made sense to me is that Pixar at the beginning was giving 90% of their profits over to Disney. How is that going to be a win for Pixar in the long run? Because at that point, they're still bleeding cash, right? How are you going to get beyond negative cash flow to positive cash flow?
And
that was my question.
And you prepared for all of this. It was what, a week or two before the launch of Toy Story.
Right, right.
So it was the first big Pixar movie aligned with Disney. But go on, because the outcome of this is great.
Well, the outcome is that he recognized and he answered the question, and he said, we will have the ability to go back and renegotiate our deal because we know that Toy Story is going to be such an amazing success. And to his credit, he didn't focus on the financials, which a lot of presentations do. He was focused on Toy Story, explaining the film, what the story was, what the characters were, how great they were, and drawing you in with what Pixar could provide with storytelling as they would with Toy Story. It was going to be a gangbuster. It was. And that's how he was going to make money. He didn't go into the weeds with the financials, which a lot of times that's where you go. He drew us in with the story.
And in fact, the original thought was that the shares were priced between $12 and $14, and it wound up at 22 bucks, right?
Thank you for that. Right. Well, he was good enough telling his story and people understanding where the technology would go, especially aligned with Disney. And so he just ratcheted up his price, and it was the best IPO that year.
So now let's forward 2025 as we're heading towards the end of 2025 into 2026. How do you, Michelle, bring the experience that you've had, which is vast, institutional investing and those kinds of experience, to individuals and to the families? How do you empower, if I were to come to you and say, help? How do you use that for me?
Well, I still do a lot in private investments. I do participate in technology and AI deals because of my experience of being able to break cash flows apart and also the network that I have. But I would also argue that because I can break apart those investments, I can break apart any investment, including publicly traded. So it makes me better at finding the products for an individual who might not have the ability yet to participate in private investments. So I can go out and find the ETFs, the active managers that are in ETFs. They're going to help a client build their wealth.
When you talk about private investments, there's concern, if I get this wrong, correct me, my favorite phrase. There's concern about private credit.
Yeah.
Using my money through a private entity to finance an ongoing concern that this is about to blow up and tank our economy. How do you respond to that?
I think you have to be very careful if you are participating in those markets at this point. You need to know your managers. You need to know how often they've experienced defaults. And when they have defaults, how they recapture the money. There's just too much money out there right now. I mean, if you looked at this around the pandemic time, right around 2019, 2020, no one was talking private credit. Okay. My firm, the firm I work for in Chicago, we did private deals, including distressed debt. So I knew enough to be dangerous. So I stick with managers that have those track records. I'll say this year has been difficult. I'm starting to see some bleeding around the edges, especially in real estate. So I had a call yesterday with somebody that does lending on real estate in the Midwest and in Texas. We keep thinking that we're immune in this part of the world with multifamily and real estate. We're not. We're starting to see defaults there. So it's my long-winded way of saying I have concerns. I also have concerns about BDCs right now. I think that there's some areas where we're going to start seeing more potential pullbacks. And less
Luddite here, BDC.
Business development company.
Gotcha.
And a lot of older people utilize those because of the income that they generate. So if you're a pre-retiree or retiree, a lot of these, and they're publicly traded, by the way.
Okay.
All right. So people seem to gravitate to them because they've got yields of anywhere from 9 to 15% or more. Well, they have those yields for a reason, right? They're in deals that are a little bit dubious, and they also use leverage. So you have to be aware of what kind of leverage, what kind of loans they're using to make those particular loans. And also a lot of them are making payments in kind for their income that they're distributing. You want cash. You want somebody who's able to have, at the end of the day, it's all about cash, right? I mean, no matter what the investment is.
When you hear Jamie Dimon talk about cockroaches, or we just had a major property owner, landlord here in New York City, that's where I am, default on almost $200 million worth of loans, several properties that generate income, revenue.
Yeah.
How do you, when you watch all of that and you've just said you're a little bit concerned, what do you say to your clients who might be afraid of, look, this is going to get a lot worse before it gets better?
I think, again, it's knowing what you know and knowing understanding your investment, and also making sure that the portfolio is diversified enough. So when people may express their fear of these things, you have to show them, or again, it's an education process of allowing them more information of what they understand and what you're sidestepping, and what you do own, and why you think it has more of a safety net than something else.
When I would imagine the skills you used in the story you shared with us about Steve Jobs, that you use those skills when you're entertaining the potential to direct your client revenues or monies towards a private alternative style investment.
Yeah.
How good are you, and forgive the language here, but how good are you at discerning bullshit from, reality? I would think you're probably pretty good based on your record, but tell us how you do that.
I don't think it's intelligence. I think it's just experience. That's all, or what people would call intuition. All right. So you can have pro formas or future financials in front of you. You can have current financial statements in front of you. But more often than not, if you've been doing it a while, that's where experience does make a difference, Adam, and not being 25 or 30 anymore. Your gut knows when it's junk. You just do. I mean, and more often than not, if you combine the financials with your gut, you're going to be right. Now, when I was younger, I always went by the financials, because that's what you're taught as an analyst. Just look at the numbers and you'll be fine. No, a lot of times you won't be. And so I see a lot of junk in terms of private deals, especially. People are always throwing stuff out there and going into the latest and greatest, especially right now, right? Anything that was AI related, let's go to that. Let's go to the shiny object. Up until recently, let's go to crypto. Let's go here. I get concerned when everybody is going towards those shiny objects and then leveraging out 2 times, 3 times. And those have been the most successful ETFs recently, are one stock ETFs leveraged 2 or 3 times. That's crap. I mean, isn't that common sense? That why would you do that to yourself unless you that's called gambling. That's not investing. All right. So invest with your gut and the numbers.
I would imagine, based on the start of our discussion, there must be experiences where you're meeting with individuals who want to attract your investment dollars from your clients, but that they dismiss perhaps, or they don't understand with whom they're dealing. They make a judgment based on the fact that you're one of the rare women in the field.
All the time. Still happens. Until they listen a little bit closely to me. And I'm usually very quiet until I start asking questions, versus what I'm doing now, where I'm, telling my story. I listen to their story and then I ask questions. And then people are like, maybe she does know what she's talking about. Maybe we're not playing with somebody that will just, blindly sign a subscription document and send us a wire.
Share with me the kind of question you would ask as you're trying to assess whether someone is a BS artist or whether they're legitimate.
Tell me your relationship with the management, or what do you know of the management? What could go wrong? Tell me what could go wrong with this deal. Don't just try to sell it to me. And that happens a lot with venture capital. is that everybody's like, oh, this is a great deal. And it's up to you as the investor to dig deeper. Ask who the competitors are. Can they name the competitors? Where are they in the process? Do they have enough cash? Are they going to have to raise more money? How many times are they going to raise money? And this has happened in the last couple of years. Everybody keeps coming back and raising more money when they tell you they've got enough. But at the same time, a lot of these technology companies want to acquire more, right? They want to acquire competition. So know what the plans are in the future, especially with the cash. Know their management's experience in the relationship of the venture capitalist with the management. Are they able to go back and ask questions of management for you? Or are they just one of many in the food chain?
One of many VC that are going to be sending money to an entity that you hope will deliver. Yeah.
Yes.
Well, let me ask you this, and then I want to back up and ask how you got into all of this. Working from a McDonald's, you shared with me before we started recording. Yeah, the McDonald's. I used to sell pizza and fudge in Old Orchard Beach, Maine, when I was a teenager.
That sounds more fun. Okay.
So what's worrying you right now, whether it's private markets or even public markets? I mean, what worries you?
What worries me are the private markets, the credit that we talked about earlier. Valuations worry me, even though yesterday, as I think you also wrote up this morning in your column, if I can call it that, great quarter, right, for NVIDIA. And I'm grateful for that because I own a lot of semiconductor stocks individually and some private AI. So I'm grateful for that. But why are we still just focused on a few number of stocks? There's still a lot of opportunities in other areas. So I just think we're just continuing to chase. And will that continue? Or are we going to wait for the Fed to say no? And I think the Fed should be saying no because the economy is still strong. And I don't think they're going to say no. And that concerns me as well.
I want to throw a metric at you. We keep hearing I used to be legacy media. I'm not anymore, but look, negativity sells. So stories about an AI bubble, stories about the economy being threatened by AI get a lot of clicks. And so the metric you keep hearing is that 80% of the gains this year in the S&P 500 come from 8 companies, or the Mag 7.
I don't think it's 80.
And yet I read, it might have been, Sam Rowe is wonderful. He has a newsletter called Ticker. It might have been Sam who wrote this, but I'm not sure. So Sam, if you see this and I'm wrong, forgive me.
Okay.
That in any given year, the majority of the gains in the S&P 500 are generated by just 4% of the companies. So not much different than what we're experiencing right now with the Mag 7. So why then should we be afraid about the incredible gains driven by AI?
Because the pace of those gains is going to slow down. And we've seen that to some degree in the past few months with NVIDIA. People are taking some money into profits off their table, like I have at least.
Peter Thiel sold all of it.
I think that was a little bit drastic. As somebody who's worked at a small cap shop that owned Cisco from an IPO, kept paring it back. And I'm, talking the Cisco that's had now they're a darling again, right? They've had their comeback story. And as somebody who worked in a firm in Chicago that took Starbucks, we participated in Starbucks as an IPO. We never sold all of it. We'd pare it back. So I'm just saying, put money in other areas. Do I think it's a bubble? No, I still think we have a long way to go in terms of technology and innovation, but I think you can make more money in other places.
All right, so let's back up a bit, because I think 15 years old, you were sharing with me, and this is, I still want to talk to you about markets after this, but how did you wind up where you are? And in one of the chapters I was reading of the book that's coming out, you talk about taking care of your mother and your sister. What was that about?
My parents divorced when I was 12. It was a very upper middle class family. My father was, at that time, a dean of a business school and then a chancellor of a university. Parents divorced. Father walked away, started a new family. Basically, we were on our own. Mother did not have a high school education. Mother could not hold a job. So a few years after the divorce, at the age of 15, when they still had birth certificates that you could white out, not like today, my mother made me 16 with whiteout so that I could go to work in a inner city McDonald's in Seattle that took 2 buses to get to. And my goal every week was try to work 40 hours to bring home as much as I could. And I did. But that kind of put education to the side because I was told education is for other people. College education is for other people. Your job is to take care of us. And I did. But at the same time, once I graduated high school, went to work for a bank, saw what a portfolio manager did, saw what the qualifications were at that time, CFA and MBA. How do I get from here as a trust operations clerk to being a portfolio manager? And I saw what they do, and it interested me. I always liked stocks. I always liked the ticker. I always liked the idea of making money. So I put myself on a path to get back to college. Took a long time, probably more than I would like, but I appreciated it more. And I saw what I needed to do: undergraduate degree in accounting, MBA in finance, CFA. And I became one of those few women who, was allowed to manage money, become a semiconductor analyst, and at one point lead a tech sector and then go into private equity. So it's just, I guess, having enough discipline and also stupidity, because when you're the oldest and you're used to doing everything you need to do, you don't see those barriers. I wasn't smart enough to see the barriers. So you just keep going. You just keep going.
Did that early experience, did it put a strain on your relationship with your mom or your sister, or did it strengthen the relationship?
I'd say with my sister, it strengthened it because she would tell you that not only was I put to work, I was the one that raised her. So I think it strengthened it. I was put in that role as a mother. With my mother, there has been tension. There still is tension. But I'm still her daughter, and I still do my best to make sure that she has what she needs.
My question may be inappropriate or inaccurate,
It's okay.
but it seems like we celebrate the Horatio Alger myth, and it's not a
Yeah.
myth, but the Horatio
Yeah.
Alger
Yeah.
story,
Yeah.
rather.
Yes.
We don't seem to celebrate the Henrietta Alger story so much. And yet there are lots of women who create the world for themselves the way you did.
That's probably true. We don't. And I need to go back to your question about my relationship with my mother and my sister, because there's one other person that's in that equation, right? My father. I have a lot of resentment towards my father because he basically said, I'm done. I'm done. I'm going to go create this new world over here. I don't have these children anymore. And that door was never opened again with my father. So he had a great life. And to the world, he didn't have 2 little girls. And that's wrong. So that was more wrong than the situation of being put to work. You don't treat children like that. And that's probably one reason why working with foundations, working with the large foundation in Louisiana, is very important to me, because I know what children need. I know what I didn't have. So I want to help those that have those needs and have potential that they may not be able to fulfill.
What kinds of discussions do you have with teenagers, boys and girls, about who might be facing the difficulties that you faced as a teen to get to the success that you've achieved as an adult?
They have to understand money. They have to, and a lot of them, not only there's no money to discuss, right? So they need to find a way to put themselves at a level where they can be competitive, they can have a job so that they can build their own lives and stop the cycle, so to speak. Like, for instance, the large foundation that I manage money for in Louisiana, we built a brand new youth center this year. It's 8,000 square feet. We have double the amount of students going to it every day from junior high and high school who didn't have a place to go. Now, a lot of them, have people that run the center that are almost like a substitute parent that are, encouraging them, and they go there every day. They not only get food, but they do their homework there. They get help there. A lot of the boys are going into ROTC, seeing opportunities that they wouldn't have seen before. So it's important for someone like me to be able to talk about those opportunities, and you've got to take charge of your money.
Are you allowed to name the foundation, or just
Sure.
client privilege not allow
No,
that?
I don't think they'll have a problem with it, because they just allowed me to make a 6-minute and a 3-minute video on what the impact of the monies in their community. It's in Morgan City, Louisiana. It's about 45 minutes outside of New Orleans. It's the H&B Young Foundation.
Let me ask you this, because you just talked about the wealth gap that's growing between the have and have-nots in our society. Lots of people have different opinions about how to correct that. I live in a city that's just elected a mayor, and one of the theories that his policies will pursue is we need to tax the very wealthy even more. But then on the other side, they say that's just redistribution. That's not growth. What would you say?
I think we need a combination of things. I think taxation of the extremely wealthy, I don't see anything wrong with that. I don't think you're going to deter somebody who has a lot of money by saying, I'm going to tax an extra 1 or 2%. I mean, you look at the difference, especially in some place like New York City, huge difference, right? I don't know what percentage it is. I'm sure it's pretty high. The people that cannot afford the rent there, they can't afford to live. I send money because I like your food bank in New York City. There's a higher need than ever just for basic food and, hygiene products. So, yeah, I mean, we all can contribute. What concerns me is that you're seeing that the very wealthy, if they do participate in philanthropy, not a lot of it is going towards things like basic necessities, housing, etc. The difference being, I'm trying to remember her name, Bezos's ex, is it?
Yes, she's the 38 billion, I believe, is what she was worth when they divorced, and she's giving almost all of it away.
But a lot of that money that she's giving away is going to things such as homelessness or, things of that nature. And a lot of wealthy people, it's not going to things like that. It's going to their favorite cause. It's not going to areas that need that support.
So let's go back to markets. What makes you optimistic right now?
Technology and innovation every day. Every day. Look where we're at and how much potential we have in front of us with not just AI, but technology in general, biotech, medicine. I think we're making so many advances. And with those advances and those opportunities comes investment, right? So I just think there's going to be so many areas that we're going to have to invest in the next 10 years where individuals can really make a difference in their portfolio.
But in the next 10 years, what should investors be looking for? May I share with you what worries me? When I hear friends who don't work in AI dismiss the power of AI, and there are articles right now about how AI is not delivering the productivity promises to corporate America that it promised. I'm not sure that's accurate. And when I hear the CEO of Anthropic, Claude, say that 5 to 10% of the entry-level workforce jobs will disappear in the next 2 to 5 years, I'm more inclined to believe him than my friends who dismiss the ability of AI to do lots of things. My question would be, how do we then help those people who are not going to have the avenues of employment growth that were available to my generation? How do we help them find productive avenues, and where is the growth going to be?
Going to your comment about friends' commentary on AI versus Anthropic, the CEO of Anthropic, I'd go with Anthropic because they know what their technology can do. And I'm also saying that as a private investor in Anthropic. I mean, I think they have a lot of potential, as do several other companies in AI. That is a big concern. But at the same time, maybe you saw it the other day, I think it was the CEO of Ford said, they can't find enough mechanics. They can't find enough people to help be on the line and do a trade anymore. So we need more people. I saw too many people going to UT that had no idea of why they were there or what they were going to do when they got out. And then they come to me with a really large loan, show me their student loans at the end and say, I'm not getting a job offer. Well, what did you major in? Well, I majored in marketing. I'm thinking about going back and getting an MBA. I'm like, get a job first and then, take on more debt. You don't even probably need an MBA and it's just going to be more expense. We need to, I don't know how we're going to do it, but we need to focus on the areas where we don't have enough talent. And I don't think the answer is giving everybody income from the universal income. That everybody needs a purpose every day to get up. Sitting at home, collecting a check is not going to do it. And it's not going to help us plug the holes where we do have a lot of need for workers, where we don't have them.
Do you think that we could have a discussion about whether our generation had it easier or harder than the current generation? But do you think that the current generation is open to the idea of, you know what? I don't need a degree in marketing. I need training in plumbing. I'm saying that because we need a plumber back at the apartment right now.
No, it's true.
Are people willing? The reason I ask that question is in my own life experience, there have been moments where you described purpose. The purpose was I needed income to pay the bills. It wasn't my passion, perhaps, but I needed to make sure those bills were covered. I'm fortunate that I'm now in something that allows me to do what I love, which is create content like what we're doing right now, in addition to paying the bills. But is the younger generation open to that? Do you think that, okay, the purpose here is pay the bills, and the thing I love to do, I get to do because I'm paying the bills?
I think there's a subset of the younger population that would be open to it. I think there are a lot of people that are just barely existing and would be happy to be retrained in certain areas. If you told them, okay, do you know as a plumber, you're going to make $100,000, $200,000 a year, depending on where you are, and you're going to have a home, and you're not going to just exist. You're going to have a life. Hopefully the people that go that direction, have not just the talent or the potential there, but may enjoy it. But I think there's another subset that we've been so indoctrinated to say, just go to school. And then they get out and they have bills and they're terribly unhappy because they're just going to some job where they don't like it. They hate it every day. Life is too short. You can do that maybe when you're 20 and 30. You're really going to hate life by the time you're 40.
As we wrap up, what is it from this discussion, because we've hit a lot of different topics, what is it you would want people to take away from our discussion?
Yes, there's still a lot of money to be made in the markets. But can we please push or use some of that money to help the people that don't even know what investments are or don't even have the ability to create their own portfolio, because there are a lot of them. We have the majority of wealth that we have in this country is through real estate and now stock portfolios. But not everybody is participating in the AI train, right? They're just not. And you've got 70% of people that are more concerned about outliving their money than dying right now. That just keeps going up and up. So take the time to, where you can, create your own investments, start from something. At the same time, I think we have an obligation to help those that will never, ever have that ability. And I think the class of people that are closer to the bottom have that empathy. So it's up to us.
That would have been an ideal place to stop, but I got to ask you, because I interviewed Ted Benna years ago when I was at Yahoo Finance, and he is the father of the 401k. He was the man who in 1978 realized you could create an additional source of income through line 401k of the then tax code. And in the interview I did with him about 6-7 years ago, he said it was never intended to be your retirement income. It was supposed to be a supplement to what was then the private pension system, which is now only, I think, 9% of Americans have a private pension. But he did the benefits of the 401k is it's for savings, essentially. But it was never intended to be your sole vehicle for retirement. And what worries me is only 50% of the country that has access to a 401k participates in the 401k. That statistic may be a bit old because it's from my days of covering retirement issues when I was at Fox. But now we're going to offer the thing that we raised a red flag about earlier in our conversation, private credit, to people who I don't think I'm really very good at determining investment choices. So I'm very conservative and I run it through somebody I trust, even though I have a 401k. But now we're going to have millions of Americans who do access 401ks with these private credit vehicles being offered to them. And who's watching out for them?
I have a lot of concern there. It's not that I don't want middle-class people and working people to have access to those things. I do. But I have the same concerns you do, because it's like, oh, we're going to make private credit and private equity available to everybody. Okay. Who are going to be the fiduciaries over those things? I have a big, big concern about that for the reasons you just stated. Yes, it's a nice concept, but I can see it blowing up for people because that's supposed to be the money that you can hopefully rely on at some point. And if we have a huge financial crisis and you have a large allocation to alternatives, let's say 20, 30%. I've heard most people say that 401ks, that's what they're aiming towards. That's a lot. And if you're close to retirement and you have a blow up or even a hiccup in private credit, and now you've got less money because somebody has decided for you that this needs to be part of your investment allocation.
It's been a pleasure talking with you.
Thank you. I appreciate your time. I hope some of what I said is helpful, be it the markets or the personal stories.